Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at the market rundown heading into Wednesday, January 11th, the S&P 500 saw a bull move to start the day, and then the bears took over towards the end of the day, and we end up with an indecision doji, and we're just watching the middle Bollinger Band support, 2262, and the upper Bollinger Band resistance of 2280. That's the range that we are in. It's a bullish range at this point, and as long as we trade here, that is known as the bullish Bollinger Band channel. So the bulls are fine holding that level. We are always just one bullish day away from a new all-time high, as we are currently. Let's see, that level is 2282. So we are about $14 shy of a new all-time high, which certainly is not significant for the S&P 500. Weekly time frame still holding exponential support. A tight range consolidation week. Not much to see in terms of support and resistance on the weekly time frame. That's where the daily time frame we should be focusing on, with the upper Bollinger Band, the all-time high, and the middle Bollinger Band support. IWM was the weakest of the three markets. The bulls showed up to maintain its tight range. And you can't get much tighter than IWM has been for quite some time now, almost a month, where we're seeing 134.26 hold as support, 134.40. And in terms of resistance, the all-time high is up at 138.25, and we hit a lower high at 137.96. So it's just a back and forth chop fest here. Higher lows, lower highs, tightening range. Bollinger Bands reflect that. And on the weekly time frame, normal healthy consolidation that certainly looks like more like a bull flag than not at this point. A little bit of sideways trading, but you can see there's a slight downtrend on that consolidation, which does favor the bulls, as we are still holding exponential support, and we're up towards the high of the week. So IWM was the weakest of the three, but bulls showing up today to keep it pretty much in line with everybody else. But QQQ, definitely the clear leader. It has hit a new all-time high 3 days in a row. We're in breakout mode above the upper Bollinger Band, and as long as we stay above the upper Bollinger Band, we will be very strong here. The technology sector continuing to perform, continuing to hold up, even though the S&P 500 sees some weakness. So higher lows and higher highs is the story here. 6 green days in a row. And when we lose the upper Bollinger Band, we know normal healthy consolidation will be coming. But that is not the case at this point. Breaking out on the weekly as well for the second week in a row. 122.33 is that level. Bullish MACD cross is already underway. And the QQQ bulls, clearly the lead bulls out of all of these sectors. S&P 500 is still second because we had an all-time high 2 days ago. Whereas IWM, the all-time high was back on December 9th. It's been over a month since we've seen an all-time high. So all the markets are still holding up just fine for the bulls. There's just some differences between who stands out as the lead bulls and who is the weakest. And watching this channel really closely for the next 3 days on the S&P 500, we'll see if we get a close above the upper Bollinger Band or below the middle Bollinger Band to give us some short-term indication of direction. I appreciate you watching. We'll check back in tomorrow.